financial position. In this lesson, we will prepare a statement of financial position with supporting notes using the trial balance of Joan Mendoza Company. The accounts on the given trial balance are as follows: cash in BPI, cash in Metrobank, petty cash fund, change cash fund, cash equivalents, account receivables, notes receivables, raw materials, work in progress, finished goods, land use in plant sites, building and plant, accumulated depreciation in building and plant, fixtures, accumulated depreciation in fixtures, patents, accumulated amortization on patents, trademarks, accumulated amortization in trademarks, land held for fair value appreciation, accounts payable, notes payable, interest payable, income tax payable, long-term debt, and capital. When we analyze the following accounts, we will notice that there are accounts that can be grouped or combined to form a single account. This account can be written under cash account. This can be written under inventories. This can be written under PPE. And this can be written under intangible assets. Let us start writing the supporting notes for the following accounts. This can be written under cash account. Let us name it Notes 1. Under Notes 1, cash, the following accounts are cash in BPI, 880,000. Cash in Metrobank, 220,000. Petty cash fund, 5,500 pesos. Change cash fund, 2,750. Cash equivalents, 11,000. Next, determine the total balance of cash account by adding the individual balances of accounts under Notes 1. And the result is 1,119,250. These accounts can be written under inventories. Let us name it Notes 2. Under Notes 2, inventories, the following accounts are raw materials, 66,000. Work in progress, 44,000. Finished goods, 110,000. Next, determine the total balance of inventories by adding the individual balances of the accounts under Notes 2. And the result is 220,000. Next, these accounts can be written under PPE. Let us name it Notes 3. Under Notes 3, properties, plant, and equipment, we have to consider the following computations. First, list all the costs of the individual PPEs as follows. For land, it's 110,000. For building and plant, it's 220,000. For fixture, it's 110,000. Next, deduct the respective accumulated depreciation of each PPE. For building and plant, it's 22,000. And for fixture, it's 11,000. Notice that the land has no accumulated depreciation because land is considered a perpetual asset. Its market value does not decrease in time. Finally, compute the carrying cost. For land, it remains 110,000. For building and plant, it's 198,000. And for fixture, it's 99,000. Adding all the carrying cost will result a total balance of 407,000. These accounts can be written under Intangible Assets. Let us name it Notes 4. Under Notes 4, Intangible Assets have the following accounts. We have to consider the following computations. First, list all the costs of the intangible assets as follows. 110,000 for both patent and trademark. Next, deduct the respective accumulated amortization of each intangible assets. For this account, both will amortize in an amount of 11,000. Finally, compute the carrying cost. Both accounts have a carrying cost of 99,000. Adding the two will result a total balance of 198,000 pesos. Lastly, long-term debts. The payment for long-term debt is divided into two, the current and the non-current portion. Although it is not stated, let us assume that the loan amount of 550,000 is to be paid for 10 years. The long-term debt schedule will be our Note 5. For year 1, we will pay 55,000 and the balance is 495,000. 55,000 will be recorded as current liability, while the balance of 495 will be recorded as non-current liability. After all notes are prepared, let us start writing the statement of financial position. Please take note of the following balances of our notes, from Notes 1 until Notes 5. Statement of financial position is introduced by a header containing the following: the name of the company, the name of the financial statement, and the date. The first part is the asset, current and non-current. Note that the arrangement of the accounts is according to its liquidity. Since cash is the most liquid account, this is the first account on our statement, and so on and so forth. For cash and cash equivalents, from Notes 1, it's 1,119,250. Accounts receivable, 220,000. Notes receivable, 22,000. Inventories coming from Notes 2, 220,000. And the total current asset is 1,581,250. Properties, plant, and equipment from Note 3, 407,000. Intangible assets from Note 4, 198,000. Investment property, it's 1,100,000 for a total non-current asset of 1,705,000. When we add the total current assets and the total non-current assets, we will have a total asset of 3,286,250. Next part is the liability part, current and non-current liabilities. Accounts payable, 220,000. Notes payable, 110,000. Interest payable, 11,000. Income tax payable, 99,000. And for the long-term debt, the current portion is recorded under current liability, 55,000, and the non-current portion is recorded under non-current liability, 495,000. And lastly, the owner's equity, a capital of 2,296,250. If we add the total current liabilities, the total non-current liabilities, and the owner's equity, we will have a total liability and equity of 3,286,250. The complete statement of financial position should look like this. Notice that the balance of total assets and total liabilities and equity are equal at 3,286,250. And this is how we prepare a statement of financial position